Most funded traders spend hours learning how to pass challenges, but almost no one thinks about what happens after the payout hits their account. Taxes. And if you don't understand how they work, you can easily lose a big chunk of your profits, or worse, get in trouble later. These are just generic rules that apply to most traders around the world. Tax systems change depending on where you live, so always check your local regulations and speak with a qualified tax consultant to understand exactly how it works in your country. Let's break this down simply. When you get paid by a prop firm, you're not getting a salary. You're not an employee. You're providing a service. You trade their capital, they pay you a share of the profits. That payment is business income, not trading income. So if you make $10,000 of profit from $100,000 account with an 80% profit split, you don't pay taxes on the full $10,000 that the account made. You only pay taxes on what actually lands in your wallet, the $8,000. And here's something important. Prop firms don't send you tax forms. They don't withhold anything for you. They just pay you. That means you're 100% responsible for declaring that income in your country. Ignoring it doesn't make it disappear. It only piles up. Now, here's the part that most traders miss. You can lower your taxes a lot by treating your trading like a business. Because that's what it is. A one-person business. Think about this. If you pay for challenges, trading software, Discord groups, news feeds, data connections, or even your internet and computer, those are business costs. And business costs can usually be written off against your income, reducing the amount you're taxed on. Let's make it simple with a quick example. Say you made $8,000 in payouts this year. You spent $1,000 on challenge fees, $500 on data and software, and $500 more on education or servers. That means you can show $2,000 in expenses. Now your taxable income is only $6,000, not $8,000. Depending on your local rules, that can make a big difference. Most traders forget this because they think it's just online income. But your government doesn't care if it's online or not. Income is income. That's why smart traders separate everything early. They have one bank account or wallet just for trading, and they keep a simple spreadsheet for each payout, each fee, and each expense. You don't need a fancy system. Just track what goes in and what goes out. If you ever get audited or asked to explain your earnings, you'll be ready in minutes instead of panicking for days. By the way, if you want a list of the best prop firms I've tested, along with some promo codes that give you discounts and help support my work, check the pinned comment below. It really helps the channel, and you'll probably find one firm that fits your style. And while you're there, don't forget to like the video and subscribe so you don't miss the next deep dive I post for traders. All right, back to the taxes. One of the biggest questions traders ask is, when do I actually owe taxes? The answer is simple. You owe taxes only when you receive the money. If your account balance goes up, that's not income yet. If the firm hasn't sent the payout, it's not taxable. But the moment it lands in your bank, crypto wallet, or payment platform, that's when it becomes income. That's also why prop firms don't issue the same kind of tax statements as brokers. They pay you as a contractor, not an investor. So don't wait for them to send you any reports. They won't. Now here's where most traders get stuck. They confuse trading their own money with trading prop capital. If you trade your own funds, in many places you're taxed on capital gains. If you trade prop funds, you're taxed on business income. Two totally different things. Capital gains usually have lower tax rates. Business income, on the other hand, is taxed like a job or self-employment income. So the faster you accept that you're running a business, the faster you can start using business advantages. Another big mistake is not planning for tax season. Traders get their first 5K or 10K payout and think it's all profit. Then months later, they realize a large part of it actually belongs to the tax office. To avoid that, put a part of every payout aside the same day you receive it. Some traders use 20%, others 30%. It doesn't matter the exact number, as long as you build the habit of setting it aside. If your country allows it, you can also make quarterly payments so you don't get a huge bill at once. It's a lot easier to pay a smaller amount 4 times a year than one big surprise at the end. Now, let's talk about something even more practical: business structures. At the start, you can trade under your personal name, no problem. But once you start making regular payouts, it can be smart to register a small business or company. That allows you to open a business bank account, take deductions legally, and sometimes even lower your total taxes depending on your country. Even if you don't form a company, think of yourself as one. Have a trading folder. Keep all invoices, payouts, and receipts. When you pay for a new prop challenge, save the email receipt. When you get a payout, record it. These small habits are what separate amateur traders from real professionals. Let's go a bit deeper into expenses, because that's where you can legally save the most. For example, if you pay for a 100K challenge that costs $550 and you fail it, that's still a business expense. It doesn't matter if you passed or failed, the expense existed. Same thing if you pay monthly for charting tools, signal groups, or trading servers. They all support your trading activity. Write them off if your local laws allow it. If you trade from home, some countries even let you claim part of your electricity, rent, or internet as business use. But only if that space is used for trading. If you trade from your bedroom and also sleep there, it might not count. Always check what's allowed where you live. And that brings us to one of the most important lessons. Even though we're explaining this in simple language, every country has its own rules. So when you start making consistent payouts, get a professional accountant. But not just any accountant. You want one who understands trading and online income. If your accountant doesn't understand what a prop firm is, you'll spend half the time explaining instead of solving your problem. Interview them like you would test a new prop firm. Ask what kind of clients they work with and how they handle online contractor income. You don't need a big or expensive firm. A good, experienced accountant will often save you far more than they cost by finding deductions you didn't even know existed. Here's another thing most traders never think about: how taxes change when you grow. At first, your payouts might be small, maybe a few hundred or a few thousand each month. But once you get multiple funded accounts or scale up to six-figure payouts a year, you enter a completely different tax level. That's when you should start planning like a real business, not like a side hustle. You might need to start saving for retirement contributions, keeping better records, or even separating your trading entities. Now, let's address one of the most common questions. Do you pay taxes on refunds or bonuses? If a prop firm refunds your challenge fee or gives you a bonus payout, that counts as income because it's money you received. But if they refund your challenge fee by giving it back to your card, that's not taxable because you didn't make a profit. You just got your own money back. If they give it as a bonus on top of your payout, then it becomes income. Another area of confusion is crypto payments. Many prop firms pay in crypto now, and traders assume that's invisible to taxes. It's not. If you receive crypto, it's still income at the moment you receive it, valued at the price that day. Whether you sell it or hold it later doesn't matter for that first step. The easiest rule to remember is this: when money leaves the firm and reaches you, it becomes taxable. What happens after that, whether you trade it, convert it, or spend it, is a separate story. The biggest mindset shift you can make is to stop seeing tax as something scary and start seeing it as part of your system. If you treat trading like a business, taxes become just another monthly cost of operating, like data fees or internet bills. And once you plan for it, it's no longer stressful. To wrap this up, let me give you a simple checklist that works for traders anywhere in the world. First, keep records of every payout and every expense. Second, Separate your trading money from your personal money. Third, set aside a percentage of every payout for taxes. Fourth, find an accountant who understands traders. And fifth, never stop learning. Tax rules change, but discipline never goes out of style. If this helped you understand prop firm taxes better, you'll find even more tools and trusted prop firm links with promo codes in the pinned comment below. Those are the same ones I've tested myself, and using them also helps support this channel. While you're there, hit the like button and subscribe so you don't miss my next breakdown for funded traders. Because in this game, knowledge saves you more money than any discount ever could.